We're starting to see volatility come back into the market this week after a fairly quiet last week. To end last week, we had December 1st and 2nd. This large spike was the day Powell spoke, but this week so far, we're seeing consistently high volatility, which tells us that, hey, we now have room to find trade opportunities in our favorite markets. Now, let's start first with taking a look at the S&P 500. And then we'll move on to going through some of the stocks that hit our live scanner. We'll go through all 4 of the stocks on the overlap tab. And today something peculiar happened where all 4 of these stocks, they did not breach until really later in the day, starting about 10:30 a.m. Pacific onwards. That's when we had the first stock hit our overlap tab. So a little bit unique there in terms of the volatility profile today. So we'll keep special attention at this time period when we look at a chart of the S&P as well. Now, outside of these 4 stocks, I'll also show you what the hourly and the daily volatility box model tab looked like today, which gives you an idea of more markets in case you're looking to trade a particular kind of market. Now, let's start first with the S&P 500. So I'll load in a chart of the ES futures. And early in the morning, in fact, before 7 a.m. Pacific, we knew that the S&P was going to be a bit more volatile. I start with our scalper volatility box models in the S&P, and we had already breached the lower edge of our volatility box models. And for our morning test, in which we determine which volatility box model to use, the S&P and the scalper model did not work together. In fact, the scalper model failed on the S&P when price action went outside of the morning clouds. So before even having any capital at risk, we knew that the S&P a little bit more volatile than usual. We can't be looking for scalp opportunities. Instead, we need to be using our aggressive volatility box models. Now on the aggressive model, we had no fade setups today. The one setup we had was our trending setup, which was looking for a move into our actual volatility box zones, not away from it. Now, for those of you that like fade setups like myself, we did have many stocks that gave us that opportunity today. And they were in that 10 to 11 a.m. hour, most of them triggered during that period. So looking at that 10 to 11 a.m. hour in the S&P, this is what the market looked like. We had made a new leg down lower. And in this volatility right here, this was where we had enough selling in certain stock markets, which pushed them over the top and had them appear on our overlap tab, meaning extended on the hourly basis, extended on the daily basis. So let's start by taking a look at FBHS. So I'll load in that chart. Let's load in our stock volatility box models. And we can see that FBHS breaches our lower volatility box clouds right here. In fact, we go even outside of it. Now, the reason this particular ticker was interesting is it had breached our hourly and daily models. We know that from it being on the overlap tab right here. It's a long opportunity. We also had the beginnings of our momentum signal setup here. We had the V-shaped reversal aspect met with 1, 2, 3, 4, 5, 6, 7 Keltner channel wedges. These wedges tell us that, hey, price action is extended even beyond the 3.0 Keltner channel. We then had our overbought, oversold confirmation with the edge signal, and we had that confirmed with that 3 EMA crossing the 8 EMA, giving us that momentum cross. And really after that was the pump into the close inside of Fortune Brands Home and Security. No idea what this company does, but the live scanner went. It found us an opportunity that, hey, we might have a potential volatility edge here. We take a look at the charts. We have a nice setup, a setup we recognize and we have rules around. That setup rule is met as soon as we have the momentum signal right here, 1140, and it's the final rally into the close that you're able to take advantage of with the initial risk of about 43-45 cents. Now let's take a look at another example of a stock chart here, CE. So CE Celanese Corp, same idea here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 Keltner channel wedges that are plotting. We're also breaching our stock volatility box models, both the hourly and the daily, which is why it's on our live scanner on the overlap tab. We have the oversold confirmation signal. We have the momentum cross take place same time period as FBHS. And since that point, we have a pump into the close. Next up, SNY. This stock was a bit of an oddball in which we actually had a massive move up where we blew through the volatility box clouds. No real trade opportunity at all here. We didn't even have the full setup being met, even if you were looking to trade this crazy volatility, until the final bar of the market. So SNY, no trade setup there. And then finally Raytheon, RTX, same idea here, 1, 2, 3, then we have a pause, 1, 2, 3, looks a little less clean compared to some of the other setups we've seen, but same overall idea, extended using the Keltner channels, extended using our daily and hourly models. We have the oversold confirmation 3 times here, 1, 2, and 3 arrows, and we have the momentum cross, after which point, very little heat that you need to deal with on this particular trade idea. And then if we come back inside of our scanner now, let me show you the hourly tab as well. So these are a little bit more granular opportunities, only looking for hourly volatility box model breaches. And here you had the likes of Caterpillar, you had Raw Stores, FBHS as well, Philip Morris, Gilead Sciences, Match.com, several banks as well. We had JP Morgan trigger at some point, I believe, along with Bank of America. We can see that here. So lots of large market cap stocks that appeared on the hourly volatility box model tab today, in addition to the daily tab as well. On the daily tab, we had Disney, we had KMI, we had Raytheon, we had CVX, a lot of energy stocks, Honeywell. We also had XLI as the entire ETF that triggered. Accenture, so a variety of different stocks across both the hourly and the daily scanners. And if you wanted to keep things nice and simple, the overlap tab is the best of the best opportunities, looking for, if this was almost a Venn diagram, a place in which the two Venn diagrams overlap with the hourly and the daily models. I hope you found today's video useful. We started with taking a look at the S&P 500's volatility. Early on in the day, we had the scalper tell us that, hey, we have a little bit more volatility in the S&P compared to usual. The aggressive gave us only a trend trade opportunity, not a fade opportunity. And for fade setups, we had 4 nice, easy, clean setups that the overlap tab had found for us. Out of these 4, 3 were actually good and tradable. SNY, not really tradable at all. If instead of any one of these 4 stocks, you were looking for other opportunities, the hourly and the daily volatility box models live scanner tabs each gave you their own set of trade setups that you could use and filter using either your own setup or the momentum signal setup that I just applied as well. Take care, everyone. Good luck trading, and we'll see you in the next update.